All right, good afternoon, everybody. Uneducated Economist here. So, in this video, we're going to be talking about how the Federal Reserve cutting rates is actually a bad sign. This is not something that you should be looking forward to, but actually something that you should be very cautious of. In that, if you are seeing the Federal Reserve cutting interest rates, it's almost imminent of a recession. Now, if you go and take a look at the link that I left down in the description, it's to the Fed funds rates over the course of, I don't know, I think it goes all the way back to like the 40s or 50s or something of that nature. But you can see all the gray vertical lines on this graph are all recessions. And if you look at the Fed funds rate, every time the Federal Reserve goes to lower rates, it almost always leads into a recession. There was a time, I think, in the early 80s, like around 84, where the Fed funds rate had fallen and it didn't cause a recession. And then again, like in the early 90s, they had lowered rates for a while before raising them fairly significantly. And then again, a recession right after they started lowering them again after that. So there are times in which that the Fed does lower rates and it doesn't necessarily lead into a recession. But most of the time, when you look at that graph, like most of the time, you are going to find that when the Federal Reserve starts to lower rates, it almost always leads into recession. And even just recently, prior to the pandemic in 2019, the Federal Reserve was lowering rates, and then the pandemic kicked in. And everybody was blaming the recession on the pandemic. They said it, the pandemic induced recession. And yet, a lot of people who are Fed watchers were saying, well, the Federal Reserve was lowering the Fed funds rate, which is almost always a predictor. Well, not necessarily a predictor, but imminent of a recession. You would see the Fed funds rate coming down. That's what was taking place in 2019. And then all of a sudden, everybody starts blaming it on the pandemic. So, knowing ahead of time that the Federal Reserve, when they lower rates, is something to be very cautious of, and causing a recession is not something that you necessarily want to look forward to. And that's what I find very interesting about the markets, or at least a lot of the market perception out there, is that they get excited with the idea that the Federal Reserve is lowering rates. And now I understand the idea behind it is that if you lower rates, then loans will be cheaper. People will be able to service the debt a little better than they could before. And therefore, there would be economic activity taking place on account of this. Now, I understand that logic behind it, but really, if you understand what the Federal Reserve is attempting to do, they are trying to slow the economy down with the elevated interest rates. And because the economy has slowed down dramatically, they are now having to try and support the economy with the lowering of interest rates. Now, that again is pretty much the idea that a lot of people have within the mainstream media narrative, right? Like that's a very common thought. However, understanding it from the credible threat theory like we do, knowing that their forward guidance, their jawboning, their signaling, the words that they use will then have the market participating in a way as if those rate cuts had taken place already. And now again, we are starting to see this happen within the economy. So when I look out there and I think about whether or not the Federal Reserve is going to cut rates, which seems very, plausible that they are going to be cutting rates. When I think about like what they are doing what they are doing when they are lowering those rates and what the idea is behind it in order for the markets to then participate in a way that they are looking for, right? Now, what is it that they are looking for? Right? Has the inflation battle been won? Well, to me, the inflation battle had more to do with a supply chain breakdown. I know a lot of people would disagree with that, but lumber is a great example of this idea or this theory, or to me, it seems very logical that the supply chain breakdown had more to do with the price inflation that we had experienced, and that the Federal Reserve played on that idea so that they could have the elevated inflation expectation in order for them to save their monetary policy. This is something that I have explained time and time and time again on this channel, and I know it is very difficult to wrap your head around some of these things. But if you follow lumber, you're going to see that lumber is trading at less than 500 per thousand right now. And to a lot of people, they'd be like, what the hell does 500 per thousand even mean? Understand this. Back in 2018, we had lumber selling for $650 per thousand, far above the levels that we are selling it today. Right? This was back in 2018. We have no inflation experience taking place within lumber right now. It is gone. No price inflation whatsoever. All the added cost, energy cost, wage cost, all that other stuff has not driven the price of lumber up like everything else out there that everybody has seen. Why? Why was it that lumber did not experience the inflationary scenario like everybody had anticipated everything else was going to do? Right? It's because lumber is a well functioning, well distributed, very domestic, no competition from foreigners, right? It's all here in the United States, and being well established and 100% domestic, our energy, our product, our mills, our distribution network snapped right back into distribution, right back into supply. All that inflation that had created the elevated prices was due to a supply chain shock that had taken place at the time. Something that we had described many times here on this channel, with mill curtailments and shutdowns and closures that had taken place all leading up into the pandemic. And now here we see prices are very low considering how much everything else has gone up in price. Mill curtailment is now running rampant through this industry. I'm finding where some product is so plentiful and is on sale just so they can try and move the products because nobody's buying. Other stuff is almost impossible to find, and this is all within the lumber industry. For example, I'm watching lumber prices on 2x12, which is not a very popular size any longer because they used to be used for floor joists and roof rafters, and now engineered systems are more prevalent within the market. So I'm watching like 2x12 8-footers, very prevalent, on sale, selling for less than the futures price, offered up at $400 per thousand, right? Where futures price is selling at $490. They're desperate to move this stuff because nobody's buying 8-foot 2x12. And you go and you look for 2x12 16-footer, none to be had. Price on 12-foot, $640 per thousand. Almost 240 per thousand difference. And now I understand that a lot of people might be hearing these numbers and being like, dude, I don't understand what this means. Right? But to understand that $400 per thousand board feet, right? That's what it's selling for, and it's on a unit of 8-foot lumber, but the 12-foot unit is selling for $640 per thousand, $240 per thousand difference. Right? That is a huge gap in between. That's a huge wedge in between those two prices. That's a major spread. It shouldn't be that much, 10, 20, maybe 50 per thousand difference. But when you see a spread of 240 per thousand, you know that 12-footers are incredibly limited. 16-footers, not even available. 8-footers, as many as you want, right? Until they are gone. And this is what we are experiencing within the lumber industry right now. People don't realize how impactful the lumber industry is on the economy when it comes to housing. How much of a sign of what is really taking place out there. You think about it, there is shortages of lumber dramatically. There is huge shortages happening right now within the lumber industry, and mills are shutting down, and the lumber price is at pre-pandemic, even more than that. It's like at 2018 prices. What does this say? It's showing that the economy is not doing well. Lumber is a terribly good sign of it. Right? And I mean terribly good sign because that's how bad it really is. It's terrible. If you saw lumber in high demand, if you saw the prices moving up, if you saw the mills ramping up production, not shutting down, right, you would know that there was a lot of economic activity happening out there. Think about all the things that come from building a home. Building a home is probably the #1 manufactured product here in the United States. Think about it. It's 100% domestic supply. It stays here in the United States. When you build a brand new home, what happens? You fill it with all brand new amenities and furniture and all the stuff. right? All the stuff that would go out there, you go out to the economy and buy to fill the house up. More houses, new houses that get built, the more times people are moving, the more economic activity is happening out there. And when you have a dramatic slowdown in the building industry like we are experiencing today, and there's no better sign of it than looking at the lumber industry, right? When you see this dramatic slowdown, you know the economic activity is crashing. It's like it's an obvious sign of it when you see how incorrect this lumber industry really is. Like, you know, give it some time and you're going to find that the whole flip on what it is that's taken place within the economy. Right now, we have deterioration. And eventually that deterioration is going to find its bottom. And the build will start. But when that build starts, it's going to be very difficult in the lumber industry to supply into any kind of significant demand. The less we experience demand, the more curtailment, the more inventory depletion, the worse the pain is going to get when it does flip. Interest rates moving down is not a good sign. It's a sign that things are not doing well, that things are slowing down. People get excited about that, thinking that they will be able to get cheaper loans to go out there and buy the house, but they don't realize that the economic activity has slowed down so much that they no longer have a paycheck. So people get excited thinking that if there is a slowdown in the economy, for some reason there might be a crash in housing prices. And that crash in housing prices will give them the opportunity to then get into that house, but they don't realize that getting a loan at that time is going to be very difficult. And the people who are buying houses are going to be buying them with cash. Yeah. The wishful thinking that comes from lowering interest rates is not a good thing. It's hopium that will lead you into a bad situation. And you can see it every time the Federal Reserve lowers those rates, that it causes, not necessarily causes, but is leading towards the recession. Whether they're trying to prevent one or just, trying to slow the economy down to prevent a hyperinflation scenario type of event, those things, right, are the problems that most people end up facing, is that they position themselves with that expectation. The Federal Reserve screwed it up. They're going to cause a hyperinflation scenario. It didn't happen. Inflation is now coming down. People wonder where the hell they should have been. And now they think, well, I didn't have cash because cash is trash. And now the people who have cash are going to be able to pick up the assets at a cheaper price when the recession kicks in and everybody's losing their mind trying to figure it out. Where's that $50? Let's go check that out. Thank you so much. Leonis? Where is my glasses? Do I have glasses in here? I don't. Leotis? Is that what it says? Leonis? I'm sorry if I'm screwing your name up. Let's see here. I've been following the Fed and economy for a long time. I had ideas, but mostly confusion. It only took a few of your videos for the light to come on. Aha. Well, thank you so much, man. Thank you so much for the $50 too. I really appreciate that support. And yeah, once I just Leonidas. Okay, thank you. Thank you so much. I really appreciate that. And I want to thank everybody who has been following the channel and, all the support and everything that you have for the Uneducated Economist. What we are sharing here on this channel, I feel, is so unique. It is so unique to most people's theories about what is happening out there within the economy. What I find is that there is a lot of people who are regurgitating essentially the exact same information, misguided by the mainstream media, propagandized information, the 2% target, the inflation, scary scenario for the Fed, all this stuff that people were pushing out there that had a lot of people very much confused about what it is that the Federal Reserve was attempting to do. By me breaking this stuff down, going back over their strategy that dates back like 20 years, better than 20 years. I mean, I'd taken it back 20 years just because I think that's a good spot to start, was Ben Bernanke's speech talking about deflation and how to prevent it from ever occurring. in that speech, it was telling us right there that they will change the way that they conduct themselves with monetary policy, knowing that they were going to run into the lower bound of zero. Once they hit that, it was going to be over, and that monetary policy was going to need their words. So, my buddy Mike, what's happened, dude? So, and and so once you have recognized it, it was just like, okay, so they do have a monetary policy of adjusting interest rates. Yes, that's obvious. And everybody talks about that. And everybody seems to think that that is the main policy tool, but it's not. The key tool is their words. And once we have realized that and internalized it, and then be able to witness it in real time, like we have shared here on this channel. I mean, I try to, show the article, show the timing of it, show how it is that the people are taking this information and then running with it, and it's conducting the monetary policy simply through words. It totally works. Once we recognize it, once we see it, now we can position ourselves in the correct form. Because a lot of people are thinking, man, once they cut rates, I'm going to do this. And I'm thinking, once they cut rates, it's too late. It's already over, right? And so this is the major difference that a lot of people are now starting to understand when they follow my channel, and they're following this, this literally the words coming from the Federal Reserve itself. It's not even me. Like, I'm not making this stuff up. I mean, I give my opinion, my interpretation of it, but it's the Federal Reserve who has this information that I am going back to. Right? Like, I get data from the Fed itself, not from, I mean, sometimes I will use news articles to, to share like what it is that's being said, so that then we can understand what it is that's being communicated, and then understand that that's two different communications that are happening there. But you have to kind of read through the mainstream media news articles in order to understand what it is that's being communicated, so that you'll understand how the markets will react to it, knowing that the Federal Reserve is using that for their monetary policy. Did I get all that right? All right, 385 people watching, 84 likes. Thank you so much for hitting that like button. And thank you, Leonidas, for the $50 super chat. It's very generous of you. All right, Josh, exactly. They need more ammo back. They want the neutral rate higher. Cut a few times, drive inflation, then hike for longer. Josh, but that's a dangerous position to take in, because if you're screwing with interest rates in that fashion, you will lose the credibility. You will lose that credible threat, because people won't know exactly what it is that you plan on doing. Are you going to cut? Are you going to rise? And with that, they will get very less reactive, or less, how should I put it? Less confident in the words coming from the Fed. And the Fed doesn't want that. The Fed wants them to be very confident in their words and what it is that they are communicating out there, so that they can keep that direction, right? So they can keep that open-ended direction moving in the way that they want it to. The moment that they screw that up by flipping, like if they were to cut and the raise and the cut, or do something like that nature, people will begin to lose that confidence within them. And since it's not the rate cuts itself that is doing the damage, right? Like, a lot of people want to say that. It's not the interest rate cuts that are doing it, or their interest rate adjustments that are doing the damage. It's the people's belief of that, right? That is what's doing it. And so we have to understand that they have to control the belief, and they do not want to give that up. The rate adjustments, less of a deal at all. If they want inflation, they can get inflationary scenario to now kick into the economy by their words and the way they use it. Because it's more about an inflation expectation. They don't want to screw up the inflation expectation. They want the inflation expectation well anchored at 2%. However, in the past, they had lost the inflation expectation anchor. It had fallen. And people had come to grown accustomed to the idea that inflation was going to be low. Even Trump, there's no inflation, the Fed should be printing money, right? So the idea that the inflation was no longer like a scary scenario within the economy was the Fed's problem. They needed it to be well anchored at 2%, and having an elevated inflation expectation was going to fix the problems that they had faced with the facts that they could not find the inflation that they were looking for, even after all the quantitative easing. Okay? So again, it's not a matter of rate cuts. Rate adjustments is the big thing that everybody thinks about. right? Like if they lower rates, that's going to cause inflation, but that's not true. If that was true, zero interest rate policy would have been an inflationary scenario that would have caused hyperinflation, right? That's the problem that most people don't want to consider or fail to consider at times, is that there was a time in which we had zero interest rates for like 10 years and it did not create the inflationary scenario. Yes, it did cause asset prices to go up, like houses and bonds and stocks and stuff like that. All those things moved up, but our standard of living, our wages and stuff like that remained fairly flat. And now that was the problem from the Federal Reserve right there. They were like, crap, we hit the lower bound of zero. We could not get far enough below the neutral interest rate. Stimulating the economy was not an effective tool with the interest rate adjustments. We now have to go into asset purchases, quantitative easing, and then yell at the people, you're going to lose everything you have to hyperinflation scenario. Make sure that the media pushes that belief out there, because without that combination, it won't work. So the belief coming from the people themselves thinking that there was going to be a hyperinflation scenario caused the elevated expectations to then find its way into the economy alongside a severed supply chain, which then confirmed the people's belief about the hyperinflation scenario and money printing and all that other stuff, failing to understand that zero interest rate policy did not do the inflation that they had, that essentially would be the same thing that's happening today from the money printing, all right? So you take zero interest rates and money printer, everybody says that causes inflation, but yet that same scenario didn't happen back in the great financial crisis. So this is, again, how is it that the Federal Reserve is operating? They're operating off of expectations and perception, right? The interest rate going from 5.5 to 5, or even 5.25, whatever you want to call it, to 4.754% is still incredibly elevated above the neutral rate. That's not going to be an inflationary scenario. What would cause the inflationary scenario is a severing of the supply chain or a failure to manufacture. And that's really going to end up being more of a stagflation than it would be an inflationary scenario, due to the fact that there's less manufactured products. Okay? Because if there's less manufactured products, that's generally meaning there's less people working. And if there's less people working, they're not participating in the economy. And so this is where the stagflation ends up kicking in. See, before we had all these people with all this money. They were like, here's a stimulus check, here's all this money, here's enhanced unemployment. And then, by the way, we're not going to allow anything to get through the system. Go out there and spend all that money. And what happens when all of a sudden the shelves are cleared? All right? Elevated prices start to move up. I don't believe that we're going to find an inflationary scenario that is going to come back to the economy due to the fact that there was an interest rate adjustment. What will cause an inflationary scenario to come back to the economy is more severing of the supply chain, right? Imbalance of demand versus that supply. So if you have increased employment, or the unemployment doesn't rise significantly, right? Like people getting fired, then you would find that if there was a drop in supply, manufactured stuff from around the world failed to come into the United States, then you could create an inflationary scenario from that. But it doesn't necessarily have to come from interest rate adjustments. In fact, I don't believe interest rate adjustments have that much of an impact on the economy like a lot of people want to believe. But, however, all the idea of an interest rate adjustment has huge impact, right? Because people behave in a way that then is as if those rate cuts had already taken place. And the more that they push that information, the more that they, have all these economists out there saying that there should be major amounts of it, or, they're doing it too late or whatever, has the people then pushed into the idea that, man, I need to position myself ahead of time, right, before they even do anything. Man, I am just really rambling on. Let's go check out this $5 real quick. Adam, thank you so much for the $5. First time, long time. I am an electrician plumber, busting my ass on Cape Cod this summer. I am all in on silver being the next rhodium. God bless. Well, thank you very much, Adam, for the $5. And I hope your silver purchase goes off well. Again, I don't look at buying silver as an investment. I look at it as an insurance policy. So I don't think about how much it's worth. I just think about how many ounces I have. And if there was ever a time in the future where I found that my car broke down or I just didn't have access to the funds, having a box of silver is an awesome insurance policy that you can open up and, kind of save the day with. It's nice because sitting in a bank account, a lot of times people will nickel dime it away. Having it into a, separate, secure, physical place that you are protecting of, it now gives you the ability to have something that's outside of that third party claim. It's you, independent, away from everybody, and I really can't find anything else that does it quite like silver does. Hey, dishes, what's happening? It's nice to see you up in here, mama. All right. So do you think a separation from the rich and the poor will be the lower highs and higher lows from here on until the system breaks? I don't know. When I look out there, it doesn't take much to see that if you don't have a continuation of new money that comes in, then you will have a deterioration of the system. So it'll begin to collapse. Less jobs, less economic activity. The people who have cash, who have the money, will be buying up the assets. It'll be even more separation, right? That's if you don't have new money coming in. If you have new money coming in, no matter if you give it to the rich or the poor, it will still funnel its way up to the rich, and you'll have ever increasing amounts of separation between the rich and the poor. I don't see a position in which that we go back to a time in which that your daily 9 to 5 job is going to be able to provide you with the ability to buy a house and raise a family and have all the retirement and all that other stuff. That is not going to be there. That is not a possibility, not in any way, shape, or form from here on. That's it. It's gone. Like, that is gone. However, the ability to then provide yourself with the income, with the cash flow, with the capital that you need in order to have that sort of life is very much present in our day and age. This is where I think a lot of people have maybe misunderstood what it is that's now going on. Right? A lot of people just want it to be a particular way. Like, I know I have a huge ego, right? My ego is really what holds me back on a lot of stuff, right? And my ego tells me, it was just like, it has to be this way. If it's not this way, it's wrong. And if it's anything outside of this, it's not going to be that way, right? I'm not going to do it. So I hold it all into this one tiny little view that says it's got to be like this, right? And this is where most people end up screwing themselves. Right? And I know I'm trying to eliminate that from my life. Like, anytime I see myself with my big ego that's telling me it has to go down a particular way, I tell myself, dude, let it go. Right? Let it go. It doesn't necessarily have to go down the way you think it does. Right? But however, people are like, no, my 9 to 5 job should be enough to provide me with a life. It doesn't. Just face the facts. It doesn't. A good job sucks. It doesn't work anymore. It's not going to happen like that. Right? But you have to understand there is so much opportunity, right? Think about it. There are so many ways to go out online and make money, right? I mean, this channel is a testament to that. I mean, I've said this before. You can do online sales, you can do affiliate sales, you can do Filled by Amazon, and that's just going to one platform to do it, right? There is all kinds of ways to go out there and try and earn money that is not necessarily trading your time to a particular boss at a particular location, right? Figure it out. It's hard, right? It takes time. You have to build it, right? This isn't something you go out and say, man, I tried it last week and it doesn't work. No, this is something that you have to build over time. It takes time, right? Who knows? Somebody might be able to knock it out inside of a few months and be able to figure out how it is that they can earn an income. Other people might take 6 years of building something before they finally figure out how it is that they can have that cash flow. Does it really matter at the end of it as long as you figured it out? Right? Build it, whatever it is. And you have to understand that you have to build it outside of your 9 to 5 job, right? You have to have something that is more than that because there's not enough hours in the day. This is the problem going to a 9 to 5 job, is that most of the time you're trading your time for dollars. And no matter how much your boss is paying you, there's not enough time. You only have a certain amount of time that you can work for them, right? And in that time, even if it's a lot that you're getting paid, you're limited to that. And that's as far as it'll ever go. So you have to figure out ways that you can earn money, even if it's just a little bit, while you are sleeping. Even if you earn a couple of dollars while you have slept, figure out how to make $2 while you are sleeping. Make $4, double it to $4, to $8, to $16, and this is how you build it. And you build this thing over years, whatever it is that you were working on. And eventually you will get to a point in which that you will have that cash flow coming in. It might be rental properties, it might be dividend paying stocks, it might be a business that you're investing into. Whatever it is, there's things out there, you have to figure it out. Right? Everybody is individually different in how they do this thing. People ask me all the time, what am I supposed to do? I have the money. Where do I go with it? It's like, figure that out, man. I don't know. I'm trying to figure that out for myself, right? But I know how it's supposed to go down. You got to be the capitalist or you have to be the property owner. That's it. Those are the only two positions you have. There was a time you could have had a good job and that would have been enough. If you are young, you might be able to have a good job and do it. Right? But you have to be very disciplined and you have to put that money away to a compounding interest investment for the rest of your life. And you have to be very disciplined and do it every single month and never screw that up. Right? And in that chance, you might also have the ability to be on the other side of the wedge. Everybody else is going to have to build something and work hard on top of their 9-to-5 job. Right? 9-to-5 might get you the life, might get you enough to pay the bills. Right? But if you want anything beyond that, it's going to take time and it's going to be hard work and it's going to take building something. It doesn't necessarily have to be hard work. Right? I always kind of associated success from hard work, but it doesn't necessarily have to be hard. It does have to be work. You have to do something, but you don't necessarily have to do it in a hard fashion. Right? Sometimes it could be easy, but you do have to build it. Alrighty guys, what time is it? I have got to go. I really appreciate everybody being here. 5 years, everyone will pretty much own their own biz or do DoorDash. I'm not sure about 5 years, but I can imagine that it's going to be very, very prevalent in 5 years. There's going to be a lot of people. Yep, looking into having my own home health business, working on it now. That's right, and just understand that it takes time. You have to build it. Everything takes time. Everything has to be built. I'm looking at a house right over there that was built just a couple of years ago, and I remember watching it go together, and it took time, every little piece. I mean, I've built houses together, put houses together myself, right? Every little piece has to be put into place. It doesn't happen overnight. But when you're all done, people don't really think about like all the little tiny pieces that went into it. They just look at the end product and say, wow, look at what an amazing thing this is. But you understand what it was that went into that. And that it wasn't easy and that it took time and pieces. And, eventually you get there. All right, I want to keep hanging out, but I got to go back to work, guys. I got a day job to go to, right? So thank you guys for being here. Thank you very much for hitting that like button. Thank you so much for those super chats. You guys are always so generous, man. Thank you very much for all the support and everything you've ever done for the Uneducated Economist. It's just amazing. I tell you guys that all the time. I have a new speech. It's not, I forget who, I think it would maybe come from Christopher Waller on this one, talking about a payment system. So we might be able to do a members only review of that come Saturday. We'll talk about that a little bit here again tomorrow. But if you have not become a member of the channel, I really encourage you to go and become a member of the channel. It's $1 a month. You'll have access to all the membership only videos that we have done. There is all kinds of breakdowns of the speeches of monetary policy and talking about the Basel endgame and talking about the communication styles. All that stuff we have broken down in, real understandable street level, perspectives so that we can internalize these speeches. We'll know what the Federal Reserve is up to and have a better understanding of their policies and strategies. So thank you all for becoming a member of the channel. And thank you again for everybody who is clicking on the Amazon affiliate link to the Cantillon essay. You guys know that when you buy the Cantillon essay, by following that affiliate link, that I'll get a little commission. But a lot of you also know that just by following that link, anything you put in your cart for the next 24 hours, I will also get a little commission for. So I want to thank everybody who has been following that Amazon affiliate link and just buying whatever they want, like just doing their regular business as normal. Just follow that link first before you put all those items into the cart, and anything you purchase within the next 30 days after clicking on that link for 24 hours and putting stuff in the cart, I will get the commission for it. And it's actually done quite well. My last check that came in was for a little over $100, and that's the second one that I have received. So thank you all for supporting the Uneducated Economist just by making the normal purchases you would anyway by following that Amazon link. So thank you guys. That's all down in the description. I got to go to work. Uneducated Economist, you guys let me know.